Okay. Let's look at support and resistance in a bullish market. Okay, we've already discussed the concept of support, which is if price is going up, support will serve as the base. An aid, also known as an aider. Okay, it's like saying United Nations what help. So this is support, and at the top we experience resistance. The resistance here is coming because this is where price is expected to react, but the base is there to give what? Succor or aid or help, then encourage more what? Rally. Then price will continue doing what? Come around this zone to make a new support, which is S1. This is original support or rollover support. This is original resistance or rollover resistance. Then this is arrow 1. Now, technically speaking, this is what it looks like. This is a higher high and this is a higher low. This is in a bullish market, okay? Then around here, this zone is referred to as the demand zone. Demand zone. Why is it called demand? Because this is where people are interested to buy, to get, to acquire, okay? Called a demand zone. So price is expected to, around this area, you have buyers whose orders were not filled, or those who have buy limit orders waiting, those with pending orders, or those who even have buy stop. In case of price drops to this point, their buy stop will trigger. So many traders are waiting around here to initiate buys. So, but that does not mean that price must get to this place before it continues the bullish momentum or the upwards movement. No, it just means that there is a higher probability of price reacting here in the favor of the buyers, and if it fails to react here, it may continue dropping downwards. That's just what this zone stands for. The price could react and continue from here even without reaching this zone that is in favor of buyers. Okay, that is one down now. The second aspect is, which I want to throw more light, is the rollover. Let's start with the sellers. Okay, if you check the previous video, I think this is around this area I stopped. So this is like um, a different section. I'm trying to separate it, but to get a kind of fluid understanding, you need to go and watch the one for bearish market. Okay, to just have a fluid understanding. Okay, but that does not mean it cannot stand on its own. It can. This is just a little like sort of a continuation, but okay, let's go straight to the point. No more chit chat on things are not. Okay, so this is support, this is resistance. Until price breaks this resistance, we'll be looking for sales. Just like you see, what did I say with this concept? For sellers, this is referred to as supply zone. Okay, for sellers, this will be termed supply zone or area. And once price got into the supply zone, anywhere around here, what did I say? There's possibility that price will drop to retest the low and may continue down if it has a strong momentum. But if price fails to be held or stopped by this supply zone and it breaks the supply zone, this will now become what? Our original support and the original resistance, which is like the rollover support and resistance. This will now become what? Our demand zone. There is where you hear support turning into what? Resistance. This is what the concept means. Let me draw this in pictorial form. This is price came down. I'm trying to replicate this now. It was dilly-dallying, went up around this zone. Okay, it was dilly-dallying. Let me come around this zone. It got knocked down, retested the low, and what happened? It went up, consolidated, then broke up. It took out this, I will call this ROF and SF in hindsight, since price has broken the resistance. So this will be referred to as the final resistance and the final support. Price broke up, which is what you're noticing here. And because of that, you will draw your new support, which is the SO and your RO. In drawing your SO, just like we stated here, this becomes your demand zone, DZ. Okay, this becomes your demand zone. That means this is an area with a higher probability for price to do what? React from. And what did you notice here? Price reacted from this demand zone. In the same light, you will keep constructing your what? Support and resistance like that. Now, this can be looked as support and resistance, okay, for those who are beginners. But an experienced eye will know that this is just a hiccup on the road because there was not really a consolidation on the 1 hour time frame. On the smaller time frame, yes, you could say this will become our support and resistance. But from experienced eyes, you know that this is where price you're looking at. Now, let me look at it from the angle of beginners. Because we have a red candle here, this will be referred to as a support and resistance. So this could be termed our new support and resistance. Price went up, did the same thing. Look at it. So this will be the last support and resistance for buyers. Then when price took it, fell down, you'll be anticipating what? Sells. It dropped. So if you are taking sell anywhere around here, you would have gotten huge buys until price takes this guy again, which is the last person who started this sell. As soon as price took him out here, you look for what? More buys. That is just it. Then you continue in that momentum, support, resistance, support, support, resistance, support, resistance, support, resistance. So as you can see now, price has just broken this resistance and we're anticipating it to do what? Rally. Now, if it rallies, it's expected to retrace due to people becoming disinterested or not wanting to buy at a high price. It's expected to drop a little to give what is referred to as the FVP, which is a fair value price before it does what? Rallies again. So this is just the simple concept of support and resistance in a bullish market. It's as easy as ABC. Don't need to complicate issues. Okay, so if you have any question, feel free to ask. Once again, this is brought to you by Pips Collector. Subscribe, like, and hit the notification button. Bye for now.